Absolutely, and welcome back, Romaine. It's great to have you here, of course. And what you were just talking about in terms of monthly performance, September, of course, is the most difficult for stocks. And this year, it is made worse by the fact that it's an election year. That typically brings about a decline in the month of September. And the loss at the end of August, that brings about a bigger decline, on average more than 2.5% for the S&P 500. Let's bring Scott Bauer, the CEO of Prosper Trading Academy, into this conversation. Scott, and are options supporting this, the idea that we could see some kind of a real drawdown in the month of September?
Abigail, not really. And I know we're coming off of some very light volume end of summer trading, but not really. What's really driving the market is what, in the prior segment you were talking about, the rampaging dollar, rising yields, and that's really fighting against an oversold market here and giving us, pretty much a lack of intraday direction. The macro environment is definitely bearish, but option volume is not necessarily suggesting that we're in for a big decline. I look at the put-call ratio in the SPX, really been flat, around 1.5 to 1, which is very typical for quite a while. Similar in the VIX, where put-call ratio is about 0.33 or 0.34 to 1. That's been pretty flat. And then something you and I talk about often, the skew index. We look at that also, which tells us where is there tail risk or that black swan event risk in the market. That's not really indicating either that there's much fear out there, as it's sitting right around 120, which is not an elevated number at all.
Well, what a great breakdown of all these macro option signals, Scott. And let's reconcile it with the idea that lots of strategists, Mike Wilson, of course, being one of the most well-known, calling for a big decline in the S&P 500 and what you're talking about with rising yields and the dollar. Let's reconcile that with the idea that options investors, they just don't seem too concerned. There seems to be a healthy amount of hedging, but not overly so. When have you seen this before?
I mean, you're absolutely right. That is really what I'm seeing right now. Now, this was similar in 2018, before we saw the 10-year yield really break above 3%. We saw a big market meltdown. So ahead of that, though, we didn't really see big-time volatility or a flurry or a rush of buying protection here. So I'm not saying that this is exactly similar to 2018, but something that I always tell my clientele, my customers is, and we talk about it, buy insurance when you can and not when you have to, because if something does happen, you're going to see that volatility spike a lot quicker and a lot higher than what we ever see to the downside.
Right, and I know that the way you like playing that right now, a put spread on the QQQ, those big techs which are more vulnerable. Scott Bauer, CEO of Prosper Trading Academy, thanks for joining us for Options Insight today. And from New York, this is Bloomberg.